all have the experience of working with a great company. They garner more interest, grow, then suddenly the service and product suffers. What happened? Many times it's the quality of the team that's the culprit. Great companies rely on tremendous teams, teams that inspire innovation, teams that welcome solving complex problems, and teams that have unstoppable momentum. The same is true for any real estate company. It's a team sport that will fail if it depends on one person. But with all the nuances of real estate, marketing, investor relations, acquisitions, operations, asset management, etc., how do you as an investor know you're investing in a quality all-star team that's always ready to tackle any problem? With hundreds of potential operators, how do you pinpoint who has built a cohesive team focused on growing your investment? Well, to answer that question, on this week's show, we have Zach Haptonstall, CEO and co-founder of Rise 48 Equity. Today, he joins us to explore how to build the ultimate team within any real estate business. Zach has a professional background of overseeing 110 plus employees and has hosted 200 plus member meetups and is the #1 best-selling co-author of Success Habits for Superachievers. And interestingly, Zach is also a former live television news anchor and sports reporter, which is pretty cool. So thanks for joining us, Zach.
Yeah, of course. Thanks so much, Robbie. Thanks, Nathan, for having me on. Really appreciate it. Looking forward to the event here today and look forward to providing some value for everybody taking the time to watch it.
Excellent. Appreciate that. So we'll just start off with a little bit about you. Can you tell us a little bit about yourself, sort of where you grew up, how you became to be where you are today?
Absolutely. Yeah. So I was born and raised here in Phoenix, lived here my entire life. I played, Division II football at a small school. I wanted to, go to the NFL and realized I wasn't big enough, wasn't good enough. So then the next best thing was I wanted to become a sports reporter. So I went to journalism school, the top journalism school in the country, fortunately, is here in Phoenix, the Walter Cronkite School at Arizona State University. So I got a journalism degree. I was a live news anchor and a sports reporter for Arizona PBS, hosted a show on Fox Sports Network for a short time, which was really cool at first. And then I quickly realized you can't make any money in journalism, right? And I come from like a lower middle class family. I don't come from money. So I was working full time, nights and weekends to pay for school as I was going. I had loans when I graduated, and realized, what? This is not what I want to do because it's not what I thought. I'm a sports fan, but being a sports reporter actually isn't as fun, or I'm not passionate about this. And I've got all this student debt. I need to make money. And so I was really focused on, killing my debt at that point, my early 20s. And I had read Dave Ramsey when I was like 18. I'm very fortunate to kind of get that foundational financial literacy, so to speak, just kind of self-teaching myself because my parents never really, instilled that in my sister and I. And so anyway, I went into healthcare marketing, just kind of an odd job that I fell into. I was delivering medical equipment nights and weekends while I was going to school full time, just like a job that I got through a girlfriend's dad at the time. And so after I decided I don't want to do journalism.
You quit anchoring at that time?
Yeah, I quit doing journalism. Quit doing journalism and transitioned into healthcare marketing, working for a hospice organization. So I was basically, an outside marketer. I would wake up in the morning, drive all around to doctors' offices, assisted living, hospitals, and walk in cold to build relationships with physicians, social workers, nurses, et cetera. And when they had somebody who needed hospice services, they call me. I meet with the family, get them educated, sign them up for these resources, which is all covered 100% by Medicare and goes to give them services in their home, wherever they live. So it sounds like very weird, I know, but most people don't realize hospice is actually a very lucrative and competitive private business industry. And Phoenix is actually the #1 market in the country. Florida's #2. And it's just as you would expect. It's like sunny retirement. There's a lot of geriatric population, right? So anyways, I was doing that. I was a marketer, then became director of marketing, and then became president and co-owner of this large hospice organization. So I was making, by the time I was 23, I was making over $100K a year, about a house. I killed all my debt. By the time I was 26, 27, I'm making over $200K a year, but I just felt unfulfilled. That was never my passion, but I was just doing it to kind of get that foundational base financially. So I killed my debt, bought a house, but was not happy working so many hours. I didn't know what to do. I didn't know anybody in real estate. Did not have like a rich uncle or any connections. But January 2018, I said, you know what? I don't know what I want to do, but I don't have any time because I'm literally on call 7 days a week, always working. I don't have any time to even figure it out. So January 2018, I resigned. I sold my equity in the company, and I lived off of savings for well over a year to figure out how to get into multifamily. And we first bought our first deal. It took 14 months from when I quit that job, just living off savings, burning through cash, a lot of emotional and mental adversity, frankly, to close the first deal, which was a 36 unit deal. We did a tenant in common, just bootstrapped to try to get that thing closed. Then they gave us momentum to start syndicating deals. And, since then we've now acquired, 30 different properties, all in the Phoenix metro, worth over $920 million, over 4,500 units. We have, we've created our own vertically integrated property management company. We now have over 100 plus full-time employees on full benefits. And so we've been very fortunate to kind of, scale, but it all started with us really being in the nitty gritty details of day-to-day operations. And my two partners and I, Bikram and Robert. Bikram's our CFO. Robert's our chief construction officer. The three of us were literally doing everything in the beginning, every little nuanced detail, as I'm sure you guys have experienced, Ravi, and anybody getting into this, which really gave us the experience to then, start to hire and build out infrastructure. So that kind of gives you a little background of how we got to this point.
Oh, that's great. So thanks for sharing your story. I mean, it's very interesting, and it's interesting to hear about how people developed this interest in real estate. And for many people, this is a second, sort of the second life or second job, second career path that they've chosen.
Absolutely.
Yeah. So, and we can have a completely separate conversation about how you built the company the way you did, but really want to focus on today's topic, which is creating that unique employee ecosystem, hiring the right people, creating that team. So that goes to the first question. So you've hired so many people to obviously build the team and to get to the place where you are.
Yeah.
How do you create that unique ecosystem to get the right people in your company?
Yeah, good question. I mean, it's definitely a challenge. And, when we say we have over 100 people, about 80% of them are probably, well, not 80%, probably 65 to 70% are on-site staff, right? And then we have executive leadership teams. We have regional managers. We have regional asset managers. We have a controller. We have office staff. And so, it really starts with building that nucleus of, a few really good, solid people. And so our first hire was, the first hire we needed was our director of asset management, Kaylee. And she was previously the regional manager for our third-party property management company we were using prior to us starting our own property management company. So we had worked with her for over a year in a regional manager, type of role prior to actually hiring her on our own. And so once we started getting over, 1,000, 2,000 units, we said, you know what, we need to start hiring people. We converted to an S corp, so that we could have payroll. And so, it really started by hiring her. And then initially, when you're a startup, you don't have a lot of credibility in the market, right? And so for an employee to leave an established company to a startup, it's a risk from their perception, right? Because they don't know if you're well capitalized. They don't know if you know what you're doing. And so, you really have to be transparent with those first few group of people and kind of tell them, hey, this is the vision, this is why we're going to be successful, and this is the plan. And if you take the risk with us, you will be rewarded, and we're going to give you opportunities that you would not get anywhere else. And you have to really express, the level of competition and ambition that you have, and tell them, because our goal all along was to completely dominate this market, and we had full confidence we would, and it was a matter of time. So when you can kind of really, tell prospective members that, then they start to believe, and then they start to get excited about being a part of that. Because as an employee, I experienced this myself, starting with a startup with that hospice company. When you're on the ground level, and you can play a big role, you can really advance exponentially faster financially with your experience, your resume. And so it provides opportunities for people. So you really have to try to find people who are hungry for opportunity and who don't need to have their hand held, necessarily. And it's a tough blend. I mean, we've learned, the last couple of years that it's a mix. It's good to hire some people who don't have a ton of experience because they're not jaded, and you can mold them and train them the way that you want to, and they're going to be hungry and really grind for you. And they want that opportunity. But then you can't have too many of those people, because as you start to quickly scale, what we've learned, over a year ago, is that you have to start blending in, truly experienced people as well, who are plug and play, because you're not going to have the bandwidth to constantly be training people, right? So it depends on the department, and you want to have a good mix there. But I mean, for us, we were fortunate. Our first few hires were key positions, and they were people who were well respected in the industry, and we relied on them to go recruit good people that they knew. Okay, and so we said, you know what, like, you guys are good. We've worked with you in a third party management type of capacity. Who else is good in this industry? You guys have been in this industry for a long time. Like, go and start recruiting people for us. We're going to, of course, interview them and have the final sign off. But when you start to hire your first few people, and then you empower them and give them the autonomy to build out their team and say, hey, I trust you. We hired you not to micromanage you. We hired you to build out this department. Go do it. Go run with it. And then you're trusting on them to start building out good people. And some people won't work out, and you may have some turnover. But as long as you're doing a good job, and I think we're not always based on like the resume. We're trying to really meet with people and use our instincts and be like, where does your heart lie? Like, what do you want to do? What, your background is important. We want to have a good pedigree that can translate to that position.
Okay, so let me stop you there, Zach, because you made a lot of excellent points here, and I just want to sort of reiterate that and organize that.
I'm talking too much. I'll just go forever, Robbie, so just feel free.
No, that's fine. You're saying some amazing things, but I just want to break it down for our listeners so they can really understand it. So I think one thing you said in the beginning is you must have a vision, right? So that's really important when you're in that unique ecosystem. Having a vision, so people know where you're headed. And I think in order to have that vision, and you mentioned this, you have to have well-defined values, right? You can't really kind of go into it without thinking about it. And I can speak for our company. We spent a lot of time. We spent actually, in fact, days just thinking about our values. And I'll just I'll tell you all our values: constant, never-ending improvement, people-first mentality, dedicated, humble yet confident, and resourceful. These are 5 values that we have. So whenever we are hiring somebody, and Zach, you mentioned this, you want to make sure that people are aligned with those values, because you could have a potential employee that could be the smartest person out there, but they are so overly confident and arrogant, and they might just create so many waves in your company that it's just not worth having them on board. So you have to make sure that they meet your value system. And then I really liked the comment you made. That was my next question: who your first hire should be. So you mentioned asset management, but I really like how you said you want to hire a generalist at first, right? So somebody that you can potentially mold, you could train them to do what you want them to do, because you really want to operate in your zone of genius, right? That's where that ultimately, like you, Zach, CEO, that's your zone of genius. You're doing what the CEO does. Whereas other folks can adapt and take care of the things that you don't need to do, you don't have to do, so you can focus on that. You get to a certain point in a company where you really want to focus on specialists, and that's where you were talking about getting those people that even know more than you, and that's the key. You want them to teach you. Hey, look, I'm getting to the point where I don't know this aspect about finances or asset management or whatever it may be. Teach me how you do it. You've had this experience. Show me how you've done it. So, just to sum up what you've said, and tell me if you want to add anything to that. But that seems to be kind of what you're leaning towards in terms of.
No, I agree 100%, Rob. Yeah, very well said. I mean, when I'm referencing using your instincts to hire people, you're exactly right. It comes down to the values, and I don't think that we formally wrote out our values, but it comes. When you form your initial partnership with your 1 or 2 or 3, co-founders or principals, when you've decided to quote unquote get married with those partners in a business sense, then it's because you have similar values and you want, hungry, humble, focused people. And you can't just be looking at the resume, right? Or the track record, like you said. You want people that are going to fit your culture, especially when you start to scale quickly. The culture becomes very important very quickly. Right? Because we're outgrowing our office. We've got 10 or 15 people sitting out here right now. We're buying our own office building and moving next month, but we've got all these people in a small area. And if it only takes like one quote unquote bad apple to create drama, among other staff. So you start to have to deal with all these different things. But yeah, you're right. As you scale, you build out each department and you're hiring specialists to continue to scale that infrastructure.
So gets us to the next question is, what process do you use to hire, integrate, train, retain team members? I mean, you've hired so much. How do you go about that process?
Yeah, good question. So we've primarily used Indeed and then the LinkedIn, job application function. We've actually had the most success with LinkedIn. It just seems like there's more candidates on there who are qualified and looking at things. So we constantly have ads out there, and there's a couple positions where we're good right now and we're full. But our philosophy is to always be proactive with hiring. So we would rather hire 3 to 4 months in advance of when we actually need that person, so that by the time that they're up and running and fully oriented and trained, they can kind of hit the ground running, right? And so there's a couple positions that we just constantly have a rolling ad, and if we see good candidates that come through, we may end up interviewing them. So I've had a couple interviews today. I'm sorry, this week. I've got one today. And so we really like LinkedIn. We like Indeed. Our core nucleus of employees who we trust. If they refer somebody, we're happy to meet with them and interview. And again, our department heads, we want to trust their judgment to build out their department. So if they really swear by somebody, like for example, our senior regional director of the management company, she had somebody who she knew, who she said was really good. And she's like, I really want to hire this person. And I said, okay, just hire her. I don't want to meet with her. Like, you're fully empowered. I trust you. It's your department, because at the end of the day, I'm not going to be out there in the field. And in the beginning, you want to be more involved, right? You want to make sure that you're hand selecting. But as you start to scale these departments, and you have people that you're paying 6-figure salaries and full benefits, and we have several of those people, then you need to trust those people to build their departments, and they don't want to be micromanaged. There has to be accountability, of course, right? And so we're constantly having either weekly or bi-weekly meetings, depending on the department, with those managers and directors, just to check in and remind them we're always here watching. You know what I mean? But to feel autonomous. So yeah, I mean, LinkedIn, Indeed, and then referrals has been our most successful methods.
So we've got a lot of we've done a lot of work with LinkedIn and Indeed as well. We've found a lot of great employees that way. Referrals, as you mentioned, that's really the number one that we've experienced as well. Because if you know somebody that's in your company that's a high performer, they won't get somebody in there that won't perform to that high level. They're not going to hire somebody just because it's their friend. Exactly. And I really like that you give your staff the autonomy to hire on their own. It makes a lot of sense. And you do have to at some point delegate that. I mean, as you're growing so rapidly, it's impossible for you to interview every person in such detail because you just don't have the time to do that. So it makes a lot of sense to delegate. Do you guys use a specific system that you've heard of or that you have in place to hire, to interview, that type of thing? Or do you just do you go by the resume and the interview?
Yeah, good question, Robbie. So, I mean, this actually, that's a great question because it segues into that last point you made. So initially, Bikron's our CFO, we were interviewing like every candidate that would apply who had a relatively good resume for these first, handful of positions. And what we started to realize is this is extremely time consuming. And sometimes you're in an interview in the first 5 minutes, this is not the right person, but I'm stuck for 30, 45 minutes now in this interview. And that kept happening. And so we're like, we have to change this process. This is just wasting so much of our time. So we started having our office manager we basically gave our office manager what we're looking for, the criteria, and start looking through resumes, and gave the office manager autonomy to do a initial pre-screening interview phone call with potential candidates before they even get to us. Okay. So that's something we had to adapt because it was just taking too much of our time. It was not effective. And so I don't even look at these resumes initially. Basically how it works now is our office manager, is screening and reviewing. And, if they make it past that phone call, they think that they've done a good job to progress to the next interview, then we'll interview them. And depending on the position, if it's a more senior position, then like, for example, there was a gentleman who interviewed for a senior position this week. So I think on Tuesday, he had his initial interview with who his manager would be for that department. They liked him. Yesterday, he had a second interview with us, right? So we basically were the second layer because our executive leadership team or our more senior levels, like I said, we trust them. And so sometimes we just say, if you like them, hire them. But if it's a higher level position, we want to have like that final blessing, so to speak. You know what I mean? It's an important person. We're paying you a 6-figure salary, covering all your benefits. We just want to make sure we check that box.
Absolutely.
And a lot of the time, that second interview is not. It's really like personality, culture fit. Things like you talked about. Because if they made it to the second interview, they probably have the experience, the resume, the skill set to get past the first round. But it's more about like, how are you going to fit in? Like, I interviewed a guy yesterday. He's a rock star on paper, but it's funny. It's funny you mentioned this, but he's very arrogant. You know what I mean? So we were talking, Vic and I were talking to our director of asset management, saying we're not going to hire this guy because we don't need people coming in here acting like they know it all. You know what I mean? And that's the tone that we got.
We had a similar experience, in the same process. I'll share with you guys our process, but we were talking to this one candidate who looked amazing on paper. He had so much experience, but during the interview, he was drinking. He said, "This is my 6th cup of coffee," and he was like just shaking like this. But he was so energetic and like,
that's weird.
So much energy and but also a lot of arrogance, and we were just like, this guy, as much as he knows, he will drive us all insane. And it's like you got to fit that culture. And I'll tell you all. The book that we found very helpful is called Who by Jeff Smart, and that goes through a really detailed process of how to find the right person. It's an amazing book. What it talks about is exactly as Zach mentioned, doing a screening interview first, because you can, and it should be done by someone else, not the C-suite level folks. The screening interview is the way to make sure that this candidate indeed gets the next interview, which they call a top level interview. And that interview is what the Who book recommends, is a 2-hour long interview. And that one goes through every piece of the resume and talking about everything, every aspect. Because there's going to be some people that they're going to talk the talk, and they're going to look good for that 15 minutes you're interviewing them, but they are going to mess up at some point. And that long interview is how you can figure out if that person is actually legitimate or not. And then there's a reference interview after that. So there's multiple interviews in this process. I'd absolutely recommend that book to anyone that's looking to hire. It's called Who. I also want to give you one more book recommendation. It's called Traction by Gina Wickman. It's a lot of the stuff we discussed in having a vision, creating culture, the hierarchy of your company. As Zach, you mentioned, you have the C-level people, and then you get the people below that to hire for you. That book gives you a really nice outline of how to do that in your company. Huge. We use something called a DISC score. I don't know, Zach, if you use a certain score, but there's a DISC, there's Wonderlic. I don't know if you've heard of those or you use those.
I've heard of Wonderlic. Yeah, we have not employed any of those ourselves, but I have heard of those, and I know they can be effective.
Yes. So, we haven't used Wonderlic yet, but those of you who are interested in hiring, Wonderlic is a way it's a pre-screening tool, basically, and somebody takes an actual test, and in that test, they're able to gauge all these factors. It's a pretty amazing process, and they use a lot of the information that they've compiled over the years to figure out the personality of that person and, how well they're going to fit into your company, how long they're going to stay for, that type of thing. There's an expense to it, obviously, but it may be worth it if you're hiring a lot. We love the DISC score. We use that a lot. It's sort of like a personality test. DISC stands for dominance, influence, steadiness, and consciousness. It's an acronym. And you can rate people and how they are. And, like, for example, D is when you're very dominant, you're giving direction to people, and CEOs typically have that higher D, and Vikram, our CEO, has a high D, and if you had another high D sitting next to him, I mean they're going to be like button heads. You don't want, if you see somebody like that's in the C level, you might be like I don't know if that person works. Whereas I am, as a COO, I'm in high I, which is influence, steadiness. I'm more like kind of a people person type. So not that he isn't, he is too, but like we just have a different complementary type personalities, and that we found helpful. Do you guys employ things like that, or is it more kind of just like your sense of things as you talk to folks?
Yeah, no, it's a great point you make, Robbie.
Yeah.
So we don't use those formalized tools, but it's funny you mentioned that because, I probably quote unquote dated like 7 or 8 different business partners before I met Bikram and Robert. And some people, they don't want to work as hard as you. Some people don't communicate well, and some people you clash. I had one. I'm like a D, like you would say. I'm very, I don't know, alpha male, so to speak, type A. Want to go a million miles a minute. And Bikram, our CFO, he's a relentless worker. Never met anybody who works harder than him, but personality wise is much more, calm and almost, submissive to my tendencies, which is a perfect complement to each other, right? So that we can be synchronized with everything that we're doing. And yeah, you have to be aware of that when you're hiring staff. You know what I mean? Because I gave that example. We literally interviewed this guy yesterday, and one of our directors, she's very type A, and that's why she's effective, because she has to manage a lot of people and she has to deal with contractors and vendors, and she can't take crap from people, so to speak. She has to be tough. Right. Well, this guy that we were going to hire to report to her, we had her in the interview and she's like, I don't think we're going to get along, even though he's well qualified. So you do have to, be aware of those. And, we don't use those formalized structures, but I think, my background being in the healthcare industry, I experienced high growth in that company. We went from about 40 employees to over 110 in 18 months. We were like the fastest growing hospice company, and then we sold it and we had an exit. And so I realized and learned that was a high turnover industry, right? Like these nurses and clinicians, they'll leave for any little thing because there's a lot of jobs out there. And so you start to realize how important it is to mesh personality. So we haven't had a formalized process, but I think we have the experience just dealing with people, and it's a people business, like you said, and that's extremely important.
Now, how do you decide who not to hire? We sort of went through this, but any other tips on how you decide who not to hire?
Yeah, I mean, it really depends. It depends on what role it is, and it depends where you're at in your business. So I think, several months ago, we hired a couple people, and our philosophy was for this particular department, which was like investor relations and then asset management. Our philosophy was, let's hire, younger people who are hungry, who may not have as much experience, but we can mold them. And then as we started to get busier, and because some of these people, if you hire them, if they have too much, you heard the term overqualified, which can be blown out of proportion. A lot of people don't like that term, but it is a real thing in the sense that if you get somebody who has so much experience that, they're not necessarily hungry, or the compensation that you're trying to pay them is not in line with what they expect just because they have more experience, then those are people you don't want to hire, at that particular point. And then now there's other positions right now where we've said, you know what, like we don't have time to be training these people. And these are things that we need to offload off of my personal responsibilities and Bikram's personal responsibilities. And so we need more of a plug and play person. And so the resume is going to be more important this time for these particular positions, right? Because we want to see that you have this experience and that we don't have to hold your hand, right? We want somebody who knows what they're doing, but also doesn't need, a ton of structure. Because if it's a newer department or a new position that we're creating, then we want this person to come in and really mold that position. And so it really just depends on, which department it's at, which department it is, where you're at in your business. And then you're going to determine, do I want somebody who I can mold, who's young and hungry, who maybe I'm going to pay a little bit less because they don't have the experience, or do I want to have somebody who's, a plug and play type of person?
Yeah, absolutely. And I think, and as you said, it really depends on where you are in your business. Starting off, probably somebody you can mold, a generalist, versus, if you're really getting up there, you want to hire a specialist. And, kind of adding to that point, once you do hire somebody, usually what happens is superstars will shine very quickly. I mean, there's people that we've hired that, day one, it felt like they've been there for weeks. And we're like, okay, these people know what they're doing. Mm-hmm. There's also people that may not shine that strongly at first, but they are great employees. And there's some, those people you may have questions about. And one technique that I learned, and I'm a huge fan of Tony Robbins, and this is something that he was interviewing somebody that was an expert on hiring and built multiple companies. And this is one thing he said, and this is something that you all should definitely do if you are in this position where you've hired somebody you're not sure, is get them to send you an email every day about the things they do that day, the challenges they have, and any questions they have for that day. So 3 things: the things they've done that day, the challenges, and then any questions. What you'll find is somebody that is sort of not doing what they should be doing will, you'll find out pretty evidently what they're doing that day, because you can see it. If they don't have any questions about anything, yet they're not following the right path, that becomes more obvious. And then also, some people will just not answer the email; they just will stop, and that's a red flag too. So it's a great way. And while the person's in a probationary period, everybody should have like a 90-day trial period. If they're in that period and you're not sure, ask them to do that. And if they are successful and they start revving up, then you know that you found the right person. So just another piece of advice for folks. And the final question, Zach, is, now that you've built this team, and from a different perspective, from an investor perspective, say, how do you know that this team is what they promise they are, what the sponsor promises they are? How do you know that they're a good team?
Yeah, good question. I think from an investor perspective, it's all about the investor experience. And so we do monthly reporting, we do monthly investor distribution. So those are the first things as an investor I'm going to be looking at, right? I'm going to be like, okay, am I getting my monthly report on time? Is it thorough? Is it transparent? And Bikram and his team, we have a senior accountant and an IR manager who do the investor reporting. They really do have institutional level reporting. They do a phenomenal job. And that's extremely important, because anybody can go buy a deal, right? But then you have to execute the business plan. And just as importantly, you have to clearly convey to the investor of what you're doing, how you're executing the plan, give them these advanced financial metrics. And so as an investor, I want to see I'm getting my monthly report, on time. I want to see my monthly distributions are hitting on time. And that's very important to us. We've never missed an investor distribution, always send those out the first week of every month. And then, on the front end, the investor, because as an investor, when you're a passive investor, you have all of your work is done upon the front end, right? When you want to invest, you have to sign the documents. You may have questions for the sponsor or the team, then you have to wire your funds. And so that whole process is extremely important, because that's the first impression for these investors, right? So we have a very strong investor relations team who is very communicative. And that was one of the big things that we said is like, the way that we want to handle this as business owners is if investors have questions or concerns about a business plan or the deal in general or the market, we want the investors to feel like they can come to us directly, the CFO, the CEO, the chief construction officer, the 3 co-founders, because we're syndicators, right? We're raising money from retail investors. We want to have that accessibility, that intimacy. You can always reach out to us. But when it comes to logistics, we don't have time to be getting caught up in all that stuff. And I'm honestly not as good at it as our investor relations team. So basically, somebody fills out a soft commit form, they log into the portal and they're signing docs. We have a director of investor relations and 2 investor relations associates that are reviewing every single PPM or subscription doc. These are 100 to 120 pages, and they're making sure investors have correctly filled them out, and then sending them a DocuSign if there needs to be, a question that's answered. They're answering any logistical questions of how do I fill this form out. And so if investors are coming to me with those types of questions, I'm redirecting them back to our investor relations associate. You know what I mean? Because it's more efficient, and I need to delegate those tasks. You know what I mean? And the truth is, I'm not in the PPM every day. And there's some things that they know better than I do. If they're investing through a trust, and how do I want to hold my interest, whatever, the W-9. So like if they email me directly, I'm going to copy investors at Rise 48 Equity, which goes to our 3 staff members, and say, Megan, can you please help with Mr. Smith, answer his question, and they'll immediately get on it. So that's very important.
The way your investors, any one of them can talk to you, one of you 3 at any given time. That's how you've structured it. Your investors that's can right. Set up appointments with you at any time. That's great.
Exactly right. Yeah, they can set up on our Calendly call. And the truth is, for the majority of investors, I'll have that introductory call, which is 30 to 60 minutes, go through everything comprehensively, answer any question they may have. And at least 75 to 80% of them, I don't hear from them again. You know what I mean? Because they go through the process to sign, wire funds, and then they're getting their monthly report, their monthly distribution, and that's answering everything, And so we also have a number in our wiring instructions that you can call to confirm wiring instructions, and that's going to Megan and Jake, our investor relations associates. So they're constantly taking phone calls to confirm instructions. once the docs have been reviewed and signed and filled out correctly, they're getting an automated email. We use a platform called Monday.com, which integrates with our investor portal. We use Update Capital as our investor portal. And so, we send out an email. We have HubSpot as our CRM, which you pay like tens of thousands of dollars for. We have like the highest level, which allows us to do marketing and, email blasts. And it all integrates with Calendly, Update Capital, Monday.com. And so basically investors get this email blast, they fill out a soft commit, they automatically get an email to log into the portal, complete their docs via DocuSign. Our team manually reviews every single PPM to make sure it was filled out correctly. They click a button that sends an automated email to the investor saying this was filled out correctly. Next step is wire your funds. And then we're tracking the wires every day. As wires come in, we click a button, sends an automated email. Dear Mr. Smith, your funds have been safely received. So that's extremely important from an investor.
So what you're describing basically is what you're describing is excellent communication. I think basically, that in essence is the key right there.
It is. They want to have communication and responsiveness.
Yes. And obviously, you want to have results. I mean, that's if you have a company that communicates great and zero results, you're not going to stick with them. But But the fact of the matter is, in some ways, communication is more important than results. And there's, I can even personally, I've got there's a sponsor that I've personally invested in. Great guy, like him a lot. Does not communicate well at all. I don't know what's happening with this property, though. I'm sure because I know the market. I know it's doing great, but there's zero communication from him. Versus there's other sponsors that are constantly communicating, as you mentioned, Zach. Open to talking, easily accessible. That type of stuff is super important.
Yeah.
And that's our goal this year. We have a little bit of hiccups because we've had some employees leave, some come on board. So we're getting streamlined now, but that's our goal this year is to give this, white glove, perfect high level service so that people really feel cared for, because that's what people want. They want that. They want to know that their hard earned money is put in a place that's safe and they're comfortable with it and they trust the sponsor, and that communication's huge there.
Yep.
Excellent, Zach. This was awesome. Thank you so much for your time. We have a few questions if you could stick around.
Absolutely.
To answer these. So the first one is, out of all the regional managers you could have hired, why did you choose a specific one to become your asset manager? What made her stand out?
Yeah, good question. So Kaylee was our first hire, and it depends. It really depends on the skill set of your co-founders, right? So my skill set was like finding deals, raising capital, managing relationships. Bikram is a true finance guy, economics degree, CPA. So we had those covered. And as we started to get our portfolio so big, you were on so many weekly property management phone calls and doing so much asset management. It was not realistic for us to do all that. So we're like, we need to hire a director of asset management. So it really depends on, how you structured your co-founder skill set. For her,
what made her stand out opposed to the other ones?
She already knew the portfolio, in depth. So she had no experience as an asset manager, but she was, and we had, at the time, we had used, to that point, 3 different third-party property management companies. There was a couple that we had like on one-off deals. One was smaller, so we had a different profile of management company. One was another one we tried, didn't like it. And then we had the bulk of our portfolio with this one management company, which was Kaylee as our regional manager. And so we had experience with 3 different regionals, right? And we said, this is our first hire. Like, we need to get this right. And we were fortunate to have a regional who we trusted and who already knew our portfolio and knew our business plan. That was the key. There's really no secret to it, is that she had there was continuity there. So when we said, okay, we're going to pay you better compensation, we're going to give you better benefits, and you don't have 20 properties to manage as a regional. She was getting overworked. At the time, I think we had maybe 5 or 6, you know what I mean? And as we've scaled, we hire people under her to keep those ratios in check. So it was really continuity for us. Yeah.
Okay. Excellent. Next question. What metrics do you use to keep track of employees' performance? Are these metrics that you come up with, or are they formulated and discussed with the employee prior to being implemented?
Yeah, good question. So this obviously depends, on the department. And not only do we create position-specific metrics, we create position-specific incentives and bonus structures, to keep that employee highly motivated. And so, it just depends on the the employees. So let's stick with the same thing, the director of asset management. We basically have, several different metrics. We have biweekly meetings, which are basically recurring every week, because one is, like a CapEx overall business plan meeting, and then one is a P&L meeting. Okay. So, Bikram was formerly a corporate auditor with PwC, auditing Fortune 100 companies. So he watches these deals like a hawk, and our asset management team knows that they're going to be 100% autonomous. We're not going to micromanage you. Whatever you're doing during the day is you. We're not checking in on you. You don't have to show up at the office, but each week you have a meeting, and at that meeting, you better be able to answer, for what's happening financially. And so, a lot of those metrics are like in the CapEx meeting, how long is it taking us to renovate units? Are you staying on budget? What's our exposure, our 30-day exposure, our 60-day exposure for vacancy, all these things. And then for that particular position, we're incentivizing bonuses based on like a macro execution of the business plan. Meaning, we buy the deal, we buy a 100-unit deal. The plan is to execute X amount of units. We incentivize this position by, when we sell, you're going to get basically an equity multiplier on a big chunk of money based on what our LPs receive. So basically, they know that, okay, on the front end, I'm getting, basically, we say we're gonna allocate X% of our acquisition fee when we bought it to you. Whatever the equity multiplier is to the LP upon the sale, we're gonna multiply that chunk of money, and you're gonna get that paid out in a bonus on the sale. So they're truly incentivized, just like we are, to see the entire business plan through, because that's their responsibility. And some of these people are going to be making hundreds of thousands of dollars this year in bonuses as we're selling these deals. And
that's amazing.
Base salary. So they're extremely incentivized, because they're going to make more than most CEOs will make across the country. You know what I mean?
Right.
So, and for us, it makes sense because we have thousands of investors, and these business plans are everything. And so that's one example for that role, but it really depends on the role in the department.
So and just to stack on that, it's amazing, in sharing those proceeds and profits, and I absolutely agree with the fact that you gotta tie certain goals to that bonus structure. So the way we do it is actually, I mentioned the who as a reference, and that's what we use to create what we call a scorecard. And for every position, there's a scorecard. So the scorecard is a measurable quantitative metric that you can look at and follow on a weekly, monthly basis, and make sure that person's hitting those numbers. And if they're hitting those numbers, they're getting their bonuses, and it grows like that. So they're incentivized, and the company's also on the same page. The company's goals are the same page as the employees' goals. So that's exactly how you incentivize.
Yep, 100%. And that's a huge key, because you want people who know that they can, if they're coming to a startup that's not established, they want to have upside, right? They want to have opportunity. Right. So if they can make a lot more money through bonuses than they could elsewhere, then that's what excites people. And that gets them to buy into your vision, and everybody's working so much harder. And so you want to try to find people who are incentivized by money, you know what I mean? Because that's important, you know what I mean? And then they want to be passionate about their work, but you want to find hungry people who want to make money, because they're going to make a lot if they do their job correctly.
Absolutely. Okay. Any other questions? Okay. That's it. All right, Zach, thank you so much. This was an amazing call. Appreciate your input and advice here.
Yeah, of course. Yeah. Thank you so much, Robbie. Thanks, Nathan, for having me. Sorry, I was late, but appreciate everybody taking the time to be on this. And let me know if you guys ever need anything, but really appreciate the opportunity here.
Absolutely.
All right. Thanks for that. Have a good weekend.
You too. Thanks for listening to the Viking Wealth Show, the show that inspires you to feel knowledgeable, courageous, and skilled in your passive real estate investing decisions. Join our Viking Investor Club on our website, vikingmultifamily.com, to gain access to our amazing investment opportunities. Make sure to also subscribe and leave a comment for what you would like to see in our future episodes.